Exxon is buying Pioneer Natural Resources, which is a huge merger deal. So this is awesome to see for Exxon. Obviously, the stock has kind of dropped on this news, but what I'll do in this video is I'll go over this deal. I'll go over some trends I'm seeing throughout the oil market. I'll go over the financials for Exxon, and at the end of the video, I will give you a price prediction for ExxonMobil. So with that being said, let's talk about it. So ExxonMobil said Wednesday of this week it agreed to acquire Pioneer Natural Resources in an all stock transaction valued at roughly $60 billion dollars or $253 per share based on Exxon's closing price on October 5th. This offer represents its 18% premium to the current uh, market price of Pioneer. So they paid an 18% premium for this deal. So good good price for Pioneer. It does seem like the initial market reaction was this was a better deal for Pioneer than it was ExxonMobil. Obviously, only time will tell, but really all we can do is kind of look into the real key metrics and key points of this deal and see if this deal really did make sense for Exxon, right? So let's take a look. So as I said, this was a deal for about $60 billion to buy Pioneer. The deal will allow Exxon to more than double its oil and gas production in the Permian Basin and capture $2 billion in annual run rate synergies. So this is going to provide a massive expansion of their oil and gas business. And given oil and gas prices, given the undersupply of oil and gas in the US, and really worldwide, this could really be a huge deal for ExxonMobil. October 11th ended up being a fascinating day, or excuse me, a really fascinating day for shareholders of two of the largest energy companies in the US. After several days of speculation, news finally broke that energy behemoth ExxonMobil has agreed to acquire all of Pioneer Natural Gas Resources in an all stock transaction valuing the company at, like I said, 60 billion on an equity basis and 65 billion on an enterprise value basis. As expected, this caused shares of ExxonMobil to pull back slightly while shares of Pioneer Natural Resources popped up. But the movements for both companies was fairly small since the market has already priced in the deal occurring. So we kind of saw this telegraphed in the market for the past couple weeks. So this deal really isn't super shocking. And unfortunately, we do not know yet if the transaction will end up being truly profitable for shareholders of ExxonMobil. As I said, we'll know that in the future. Nor do we have a firm understanding of whether investors in Pioneer Natural Resources have gotten a good deal for their business. According to the press release issued by ExxonMobil and Pioneers, the former has agreed to essentially absorb the latter in an all-stock deal. In exchange for each share of Pioneer Natural Resources that an investor owns, they will receive 2.3 shares of ExxonMobil once the deal finally closes. Based on where prices were before the deal was announced, this should translate to a price per unit of about $253 for those investors in Pioneer Natural Resources. And then if this all goes to plan, the transaction should be completed sometime in the first half of 2024. The management team at ExxonMobil paints this as a major win for the company because it allows the firm to more than double its oil and gas production in the Permian Basin. And ExxonMobil already really has a pretty large footprint in the Permian, so this is really just expanding on that. The purchase of Pioneer Natural Resources changes things rather drastically. Not only does Pioneer Natural Resources have significantly more acreage, totaling 850,000 compared to 570,000 from when you compare it to ExxonMobil. So it's its entire focus has been on the Midland Basin. So the size and concentration of these assets is so significant that investors in ExxonMobil should no longer consider the Delaware Basin to be their primary preserve of energy giant. Should just obviously, if this deal even happens, right? There's speculation that the FTC could come in and kind of halt this deal. I don't think it happens, and we did see someone from management come out from Exxon and say that this deal is very likely to happen. So it doesn't seem likely, but it is possible. So this is kind of an if you will. It's just like we don't know for sure that this deal will actually happen, but it is pointing to it's seemingly likely that this deal will go through. And then cost savings will first off, you can take a look at ExxonMobil's acreage in the Delaware Basin here. And then we can take a look at the Midland Basin. That's mainly Pioneer land there, if you will. So really, you can see here that they're more than doubling their acreage in the basin, which is great, right? Cost savings will certainly be an important element in determining how attractive this deal has been once management is able to look back on it several years from now. But there is also the production side of things. You see, this transaction will push ExxonMobil's production in the Permian Basin to 1.3 BOE per day using 2023 levels of output for both companies. The goal is to invest further in production in order to increase the output to roughly 2 billion BOE per day by 2027. Strategically, this move does help ExxonMobil achieve some of its major objectives. The energy company is stating that some big moves is making some big moves in the carbon capture space, but that doesn't mean that they have stopped focusing on oil and gas production. This fact of the matter is that the Permian Basin is one of the three geographical growth regions that the company has expressed interest in, the other two being Guyana and Brazil. Once this deal is completed, approximately 60% of the company's oil and gas output will come from these regions, though U.S. production will still account for the largest chunk of this at about 45%. So, really, really huge jump in production for this company. And when it comes to whether or not this deal makes sense for shareholders of either or both companies, the ultimate answer will boil down to the oil and gas pricing more than anything. And you can see this graphic here. So huge deal for Exxon. Obviously, shares fell in reaction, and Pioneer jumped in reaction to this news. Only time will truly tell if they got a good deal on this company. And then one point I wanted to make as well. So I said that U.S. oil production is really dropping, and we've seen a massive drop over the past couple decades. And you can see that in this chart here. So U.S. oil supply, the oil market is really undersupplied in the U.S. and globally. So really, any way that you can kind of get your hands on more oil production, I think is a real positive for ExxonMobil. So when we take a look at this oil rig count, we can see that we're down massively from where we were just in 2014. So that definitely does imply that U.S. oil production is pretty low right now, and to lock up more oil production for ExxonMobil, that's only going to bode well for this company. And then with that being said, let's take a look at the financials for Exxon, just to kind of talk about the company from a high level perspective before we kind of go into some Wall Street analyst ratings. So currently their PE is 8.7 times, which means that for every $1 this company makes, investors are willing to pay $8.70. And this is below ExxonMobil's 5-year average of 15 times. So definitely signaling that Exxon is trading at a discount relative to the company's own history. And then we can see here that price to book ratio is at 2.2, which is actually slightly above Exxon's 5-year average. But on a PE basis, it's definitely worth noting that this company is trading at a cheaper valuation than it has in its history. Also, we have a 3.3 annual dividend for ExxonMobil. And then revenue growth has been slower than it has in its history. So over the past 12 months, we've seen revenue grow at 3.6%, and this is below revenue growth, or ExxonMobil's revenue growth average for the past 5 years of 13%. So Exxon is slowing its growth somewhat, but it's also worth noting that revenue growth is turning around. So over the next 12 months, revenue growth is projected to be over 7% for ExxonMobil. So going from 3% growth to 7% growth, definitely seeing that growth trend kind of intensify. So like to see that there. We're moving in the right direction in terms of growth for ExxonMobil. And then let's take a look at the profitability metrics for this company. So we can see here that the gross profit margin is 34%. For those that don't know, this basically tells you what a company makes for what it sells. It's just revenue minus cost of goods sold. So 34% is a pretty decent number when you compare it to Exxon's 5-year average of 31%. So our profitability metrics are improving and are better than the company's own history, which we do like to see. And then net income margin is 14%, which is above ExxonMobil's 5-year average of 5%. Also, it's worth noting that the company has $7.40 in cash per share, roughly, which is about 5% of the company's market cap in cash. Hence, this deal, right? If they have a bunch of cash on hand, it makes sense to kind of do some M&A, right, and try to be strategically smart. So overall, financials do look pretty good for ExxonMobil. And then let's take a look at the Wall Street analyst ratings. So there are 16 different bullish ratings on ExxonMobil right now, and there are 0 bearish ratings. So this tells you that Wall Street, the general consensus on Wall Street is a bullish one for ExxonMobil. So this is very important, as those large investment managers, they always make decisions based on the investment research from Wall Street. So the fact that Wall Street is so bullish on the stock definitely bodes well for this company. And then with that being said, let's take a look at the chart and give a price prediction for this stock. So unfortunately, we had rejected this 200-day moving average on Friday, which may lead to a larger move lower for this outperforming stock. The stock has outperformed the market since August, really since, kind of oil has taken off here, right? So don't love to see that we kind of reject the 200-day moving average. That's not great. But it is worth noting that we did see the 50-day moving average cross above the 200-day moving average on September 21st, which is known as a golden cross for those that don't know, and just implies bullish momentum. So good to see that signal there of bullish momentum. So we rejected this 200-day moving average. Might see some consolidation around this level, unfortunately. So there's really 2 ways this chart could play out. So we could see a move lower off of this 200-day moving average down to kind of support here at 105, which is where the shares had bottomed on the 6th of October and the 11th. So could see a move down to the support level, or we could see a move above this level at around 112. Which this 112 level is where shares had topped out in August. So pretty major level of resistance here. If we see a move above that level, I do think we get a move to 120. Unfortunately, it does seem as if this move lower down to support at 105 seems like the most likely outcome from the stock. But obviously anything's possible. If we're able to move over this resistance level, as I'd said, I think we get a larger move higher up to 120, which is where shares had topped out in April of this year and in February of this year and in September of this year. So if we do see a move higher, I think it will be up to 120, which is really the next major level of resistance for this stock. And then with that being said, let's go over some seasonality trends we see for ExxonMobil. So October is actually the best month, or excuse me, the second best month in the stock's history. So in October, shares rise on average 2%. So worth noting there that we do have the best month in the stock's history right now. And then the 4th best month in the stock's history coming up in November. So seasonality wise, we are kind of on the side of the bulls seasonality wise. So with all that being said, covered a lot in today's video. I do think Exxon is a pretty good stock to own, especially within the undersupplied energy sector. So I like the stock long term. I think this deal is a good one, right? From where I sit, the U.S. oil market is significantly undersupplied, which is why if you're ExxonMobil, it's great to pick up some more supply for the company, obviously. So with that being said, I hope you enjoyed the video. I will end it there. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.